Is one stock that is about to skyrocket. The company is SEI, Solaris Energy. And last year, they accounted for 95% of their revenue came from XAI, Elon Musk's LLM company. This year, that is down to about 60%. They're up to 6 customers. I think those 6 are large customers. They don't state exactly who they are. They just had revenue today. Earnings are solid. The reaction was a bit of a drop and then bought up. And the drop is not worrisome because the market sold off so much. So they have mobile gas turbines, mobile natural gas turbines. They connect to natural gas pipelines and allow you to spin up electricity in a way that building a power plant can't do. It takes time to make a power plant, but they apparently can, redirect some natural gas to data centers and allow these LLMs to function. It's a new brave world. The earnings is excellent. It's not financial advice, but let's jump into this.
This is Sam Putnam.
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 All right, so this is the reaction right here. You can see how, yes, it did sell off, but it was bought up toward the end of the day. And it looks pretty strong right now, particularly given SPY selling off, Meta having a terrible time. Even some of the good reactions, Amazon is a solid one. Probably the best one still is not a green candle. You know what I mean? So I think you have to just look at these big companies and say, when they're bought up, that's a good sign. When they're not, well, this one's bought up a little, but in general, the big companies sold off a lot. And just now is the market bouncing. We can see that right now, the bounce. But you have to think that a company who had solid earnings and didn't sell off nearly like the other ones. I mean, this is basically like yesterday. Just sort of has gone sideways, even as the market has gone down. So that's the story. Call it relative strength. And as far as what the company does, there's natural gas pipelines, and then a meter is sort of connected, and that gas is redirected to power SEI's mobile turbines, which generate electricity, which then flow into XAI's data centers. So this is pretty incredible. Natural gas seems like the fuel of choice as we transition into the 5 to 10 year nuclear rollouts, and they are literally trucking the turbines around to these hookups. So this is a pretty interesting analogy. This is what they got going on. I don't want to dive too deep into what they're up to, but just wanted to make sure I actually understood even what's going on. Obviously, the use case is clear, and this is basically a gigawatt for XAI per data center. So that's a ton of electricity, and they create that power 24/7. XAI pays them fees, and yeah, this is what's needed to allow. I mean, nobody wants a new power plant in their backyard, right? So this is the transition technology that it makes that allowable. So that's bridging the gap. And yeah, we'll see if they're still the choice 5 years from now, but we don't really need to worry about that. I mean, if you're talking long term, maybe that's a risk, but short term, medium term, it's really not a big risk. The short report doesn't seem to be having, management background is a speculative impact on the stock, I think. Certainly seems to not have had any large drops. So I'm not even going to look into when that report was because it doesn't seem to affect the stock if it was recent. So this is going to be other comments from residents. Poor air quality. That's definitely a risk factor for this company. Formaldehyde sounds pretty bad. But we'll see what actually happens at the end of the day. This singular customer risk is notable as well. But if these competitors don't basically take their customers, then so far they seem like they're not in danger of that. Of course, Tesla is connected to XAI, although I don't know how professional that's supposed to be or how that's sort of described, right? These amounts of money are not large compared to what XAI is up to, but you could see how battery energy storage systems could be pretty useful in smoothing out the power provided to these data centers. And then these are the data center projects. So that's the gigawatt over 7 years. And then here's about a quarter of that. It sounds like already deployed in just a few months. So pretty incredible, fast setup. And I guess this is how XAI was able to catch up so quickly to ChatGPT and OpenAI. Of course, that's a pretty, competitive relationship. And we knew that XAI did it quickly, but this is now explaining what's actually happened. $100 million spent just in Q2. So that's a lot of revenue to SEI. And I don't know if this backlog is going to actually happen, right? Almost 2 gigawatts. Or I guess it's just over 1 gigawatt. I don't know how that makes any sense given that 1,000 megawatts is a gigawatt, but whatever. It's from Seeking Alpha. We'll give those folks they're a little slow over there. Okay, so anyway, the chart looks great. We definitely understand what they do. GEV just looks like it moves too slowly. So although these other power companies, not recently, but are broadly sort of holding up and basing, you have to look at the faster moving ones. And in particular, one that's holding up on earnings. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe, and I will put that on the YouTube posts. Once a month, I put it there for subscribers. If you want one-on-one help, head over to stockscommunity.com. You can join the Discord for $25, and I will see you there tomorrow morning.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.